Living benefits within a whole life insurance policy allows you to do infinite banking. My name is Darius and this is Carmen, and we are the founders of Wealth Nation.
Now, what Darius is talking about is a living benefit. What in the world is a living benefit? It is something that you are able to utilize while you're living. It's that simple. Whereas traditionally we get life insurance for the death benefit. When we pass, there's going to be money that's left over that we aren't going to be able to utilize while we're living. So in order to have living benefits, you have to put something called a rider on top of your policy. And what a rider is it's a provision that's given by the insurance company that allows you to amend or add coverage. So the living benefit that we utilize for our policies is something called a paid-up additions rider.
A paid-up addition rider is simply cash value. You hear us refer to cash value a lot. We're just referring to the paid-up addition rider that we add on to it. A paid-up addition rider purchases additional cash value and death benefit, living benefit and death benefit. What that creates is you have money that you can borrow from your insurance policy immediately. And that money compounds indefinitely until your last day, until you graduate. So why that's important is because over time, our health as we get older tends to go down. But with that paid up additions rider or that cash value, it's continuously adding additional funds and death benefit to your policy so that you're able to utilize that in the future. And for infinite banking, we utilize that within the first 10 to 30 days when we borrow the money and we use those cash values to replace some type of debt or purchase.
Yeah, and to put it into perspective, the policies that we design, it's a traditional whole life insurance policy. But the difference is all we do is add a rider on top of it, which is that paid up additions rider that allows you to have cash value in the very first year and beyond within the policy. However, if you just take a whole life insurance policy without the rider onto it, there isn't any cash value traditionally or typically between until the year 3 or 4. Right. So that's what makes our policies different, and that's why some people are like, what are you talking about? There's no cash value in whole life insurance. And you're right to some extent. You just have to know how to design it properly for maximum cash value.
Right.
Now, when we talk about riders, you don't have to just do the paid up additions rider. There's a laundry list of riders out there that you can speak to your insurance agents about. But it's really important to inform yourself of these riders because they can be inexpensive for what you're getting for them. Because there's some riders called chronic illness. So if something happens to you and you have maybe a terminal illness, depending on the policy that you have, you may be able to utilize some of the funds of the death benefit to cover your medical costs. There's also long-term care, where if you need long-term care as we start to age, you may be able to utilize some of those funds within your death benefit to cover those medical expenses. So just when you go on the internet, Google riders within life insurance policies and see what's out there.
Yeah, we have no idea what the future is going to hold for us, but if we have a whole life insurance policy, let us design a policy for you with those things in mind. Let's say, for example, you have a terminal illness. There's also a terminal illness rider where if the doctor says that within 12 months, then you're going to pass away. You can add a terminal illness rider that will allow the insurance policy to pay for your medical expenses during that time.
Correct. Yeah, and all it does is it reduces your death benefit, so whatever is left does get paid out to your family, but that's less money that you had to come out of pocket in order to pay for those medical expenses.
Exactly.
So it's all about educating yourself, because you need to make sure that those riders are on now, because you can't throw them on
after the fact.
After it's been designed. And then also, if you were to get terminal, have some sort of terminal illness, it's not something that you can just throw on there. So just making sure that you understand that.
Yeah. So the meat and potatoes, the meat and potatoes of what we want to get across to you is how we use riders to design your insurance policy for infinite banking.
Exactly.
Paid up addition rider or cash value is huge. because what we're able to do is add this rider, and that rider compounds indefinitely. And what you're able to do is you're able to utilize the cash value, borrow it, collateralize it, borrow it, and go and make your purchases. And by you being able to use those loans and repay them back to yourself or back into your policy, that's the process of infinite banking.
Yep, so true. Well, thank you guys so much for joining us. My name is Carmen and this is Darius, and we are the founders of Wealth Nation. If you would like more information on infinite banking, subscribe to our YouTube channel and also check out our website at wealthnation.io. We have 2 webinars on there where you can register for free and listen to the information that we have to present to you. And also you can follow us on Instagram and Facebook at wealthnation.io.